How Bitcoin actually works. In 2009, Bitcoin started as a small internet experiment. Today, it's one of the most valuable and controversial financial assets in the world. Some people believe Bitcoin is the future of money. Others believe it's a dangerous bubble. But regardless of opinion, Bitcoin changed finance forever. So in this video, we'll break Bitcoin down in the simplest way possible. What it is, how it works, why people buy it, why it's so volatile, and why governments and investors are paying attention. What is Bitcoin? Bitcoin is a digital currency. Unlike traditional money, it is not controlled by a government or central bank. No single company owns Bitcoin. No country controls it. Instead, Bitcoin runs on a decentralized network of computers around the world. This means transactions happen directly between users without needing a bank. Bitcoin was created after the 2008 financial crisis by a person or group using the name Satoshi Nakamoto. The goal was to create money outside the traditional banking system. How blockchain works. Bitcoin works using a technology called blockchain. A blockchain is basically a public digital ledger. Every Bitcoin transaction is recorded permanently on this ledger. Instead of one company storing information, thousands of computers around the world verify and store the data together. This makes the system extremely difficult to manipulate. Each new group of transactions becomes a block. These blocks connect together in chronological order. That's why it's called a blockchain. Why Bitcoin has value? One major reason Bitcoin became valuable is scarcity. There will only ever be 21 million Bitcoin. Unlike governments, Bitcoin cannot simply print more money. Many investors see this as protection against inflation. Demand also plays a huge role. As more people, companies, and institutions became interested in Bitcoin, its price increased dramatically. Psychology matters too. Fear of missing out, social media hype, and news events can all push prices higher or lower very quickly. What is Bitcoin mining? Bitcoin transactions must be verified before entering the blockchain. This process is called mining. Powerful computers solve complex mathematical problems to verify transactions. When miners successfully verify a block, they receive Bitcoin rewards. Mining helps secure the network, but it also requires huge amounts of electricity and computing power. This is why Bitcoin mining became controversial in some countries. Why Bitcoin is so volatile. Bitcoin prices can rise or fall very quickly. Why? Because Bitcoin is still considered a high-risk asset. News can move the market instantly. Government regulations, ETF approvals, institutional buying, or global economic fear can create massive volatility. Large investors, often called whales, can also move prices by buying or selling huge amounts of Bitcoin. And because emotions strongly affect crypto markets,
fear and greed play a massive role. Why people believe in Bitcoin. Supporters believe Bitcoin represents financial freedom. They like that. It's decentralized, difficult to inflate, borderless, accessible globally. Some investors compare Bitcoin to digital gold. Others believe it could become part of the future financial system. Institutional interest also changed public perception. When companies and investment funds started buying Bitcoin, many people began taking it more seriously. The risks of Bitcoin. Despite its popularity, Bitcoin still carries major risks. Prices are extremely volatile. Scams and fraud exist throughout crypto markets. Regulations could also impact adoption in the future, and many beginner investors enter crypto emotionally without understanding risk. This is why education matters before investing. Institutions and Bitcoin. In Bitcoin's early years, many people viewed it as internet money for tech enthusiasts. But over time, large institutions started paying attention. Companies began adding Bitcoin to balance sheets. Investment firms launched Bitcoin products. And eventually, major financial institutions started offering crypto services. This changed public perception dramatically, because once Wall Street entered the space, many investors began taking Bitcoin more seriously. Bitcoin ETFs also increased mainstream adoption. ETFs allow investors to gain exposure to Bitcoin without directly holding the asset themselves. For many traditional investors, this made Bitcoin easier and safer to access. Why governments pay attention to Bitcoin. Governments and central banks now closely watch Bitcoin. Why? Because Bitcoin operates outside traditional financial systems. Some governments worry crypto could weaken control over money systems. Others are exploring digital currencies inspired by blockchain technology. Regulation became one of the biggest discussions in crypto. Some countries support innovation. Others restrict or ban certain crypto activities. Taxes, regulations, and financial laws continue shaping the future of Bitcoin globally. This is one reason crypto markets react strongly to political and regulatory news. Risks of Bitcoin. Despite its popularity, Bitcoin still carries serious risks. Prices are extremely volatile. Scams and fraud exist throughout the crypto industry. Some projects completely collapse. And emotional investing causes many beginners to lose money. Security is also important. If investors lose access to private wallet keys, their Bitcoin may become permanently inaccessible. Unlike traditional banks, there is usually no customer support system to recover lost crypto. This is why education and risk management are extremely important in crypto investing. Why many people still believe in Bitcoin. Despite criticism and volatility, millions of people still strongly believe in Bitcoin. Supporters believe Bitcoin represents financial freedom, decentralization, protection against inflation, borderless digital money. Some believe Bitcoin could eventually become a global store of value. Others see it as protection against unstable financial systems. And younger generations often view digital assets differently than older investors. As technology evolves, many people believe digital finance will continue growing. Why Bitcoin ETF has changed everything. For many years, traditional investors avoided Bitcoin because crypto felt complicated and risky. But Bitcoin ETFs changed that. ETF stands for Exchange Traded Fund. A Bitcoin ETF allows investors to gain exposure to Bitcoin through traditional stock markets without directly holding crypto themselves. This became a major turning point because suddenly, large institutions and traditional investors could access Bitcoin much more easily. Bitcoin ETFs also increased mainstream legitimacy. Many investors who previously ignored crypto started taking Bitcoin more seriously after ETF approvals. Wall Street began entering the market more aggressively, and institutional money became one of the biggest forces behind Bitcoin adoption. The psychology of Bitcoin markets. Bitcoin markets are heavily driven by emotion. Fear and greed constantly move prices. When prices rise rapidly, people often rush into the market emotionally. Social media hype increases excitement. News headlines create fear of missing out. And many beginner investors buy during emotional highs. But during crashes, panic spreads quickly. Investors suddenly fear losing everything. This creates massive volatility. Bitcoin became famous not only because of technology, but because of how emotionally intense the market can become. Professional investors often focus on controlling emotions instead of chasing hype. Because in crypto, psychology can sometimes move markets faster than fundamentals. Final thoughts. Bitcoin is much more than just digital money. It became a technological movement, a financial experiment, a global investment asset, and a psychological phenomenon. Some people believe Bitcoin could become digital gold in the future. Others still believe it's too volatile to replace traditional finance. But regardless of opinion, Bitcoin permanently changed how the world thinks about money, investing, and decentralized systems. And as technology, AI, and digital finance continue growing, Bitcoin will likely remain one of the most closely watched assets in the modern economy.